Hi, welcome back to my channel. I'm Cassie Viela and I'm a realtor, property manager, and investor here in the San Antonio, Texas market. On my channel, we talk about all things real estate, from market updates and investing tips to home and garden stuff. So if that's your cup of tea, then please like, subscribe, follow, etc. Today we're going to be talking about the market. Shocker. But we're going to be talking specifically about the latest news that the market is slowing down and what that means, how accurate that is, etc. I tried to pull from sources that are, based in data that are reliable sources. I always say that you never, especially as an investor, you never want to just go off of what some guru is saying or what some famous person is saying. Now, granted, yeah, take advice from somebody who's successful. Take that advice, but don't just take it without examining it. I would say make sure there's the data to back up what they're saying, okay? So if you Google, the real estate market is slowing down, you're gonna get all kinds of crazy stuff. I want to look through and find out what's fact, like what factual information can we find about this, and then what conclusions can we attempt to draw from that. That's all we're going to talk about. Everything I pulled, I made sure to put the direct quote, and I've cited it at the bottom here so that if you want to read the entire article, you can. I found a few very good and very well cited articles. I always like that when they link to, every statement they make, they link to their proof. I think that's really good, and these sources really did that. So we're gonna start out with Zillow. So I'm gonna read this real quick. As the summer nears its end, the housing market remains very warm, but it has gotten distinctly cooler from earlier in the year. Home values continue to grow at record fast annual pace. The nation's typical home value, as measured by the Zillow Home Value Index, grew 17.7% in August from August 2020, setting a new all-time high annual growth rate for the fourth straight month. But while the annual appreciation continues to set new records, monthly home value growth has begun to soften. The national Zillow Home Value Index increased by 1.75% in August from July, a slower monthly pace than the 1.97 monthly clip registered in July. Of all of the for sale listings that went pending last week, 78% of them did so after being on the market for fewer than 30 days. That's down from a high of more than 85% earlier in the year, but still more than 25 percentage points higher than the shares in the same weeks in 2018 and 2019. So what does that word jumble mean? Basically, they're saying that year-over-year growth is phenomenal. 17.7% year-over-year growth is stunning, right? But then we're noticing that month-to-month growth is starting to slow down. So August 2021 versus August 2020, the market has gone right way up. But August 2021 compared to July 2021, it's kind of starting to cool off a little bit. And then the last sentence there, the 78% versus 85%, that's an indicator of days on market increasing a little bit. And so all of that is just to say that the data is showing that the market is still incredibly strong versus this time last year. And we're still seeing phenomenal growth. It's just that the growth is starting to slow down a little bit. If we were in a normal market where we didn't have just this complete run-up that we saw in 2021, this would not be news, but it's just because it's like the first very small indication that the market's kind of starting to cool off. And so then we're also going to look at fortune.com, and I like these articles by Lance Lambert. I actually used two of Lance Lambert's articles. I really liked them because, again, he cited his sources really well. And so I was able to go and check things there. So really good articles. So recently, some of that exuberance has finally left the market. Indeed, since bottoming out this spring, housing inventory is up 30% as some homebuyers start to balk at record prices, and more sellers who fear losing out on big gains are enlisting. While the market is clearly still a seller's market, it has inched a bit in buyers' favor in recent months. But what does softening in the housing market mean for home price growth? The consensus among the industry's forecast models is that we're heading for slower, albeit still positive, growth. The weakest projection comes from real estate research firm CoreLogic, which is forecasting just a 2.7% appreciation in the coming 12 months. Meanwhile, John Burns Real Estate Consulting and Freddie Mac, which do calendar year forecast, project home price growth of 4% and 5.3% respectively in 2022. So all of that is to say that, we just talked about that August 2021 versus August 2020 had a 17.7% appreciation. And now CoreLogic is looking ahead and saying, we only predict 2.7% appreciation. It's a slowdown. It's definitely a significant slowdown from where the market was. I mean, 17.7 to 2.7 is significant. However, it's still positive. It's still going up. It's still, we're not seeing a crash. Nobody that I saw that was looking at data was predicting prices going down. All of the data firms that I looked at are predicting prices staying the same, increasing less than in the previous few years. And again, that's from Fortune and by Lance Lambert. So this is a graph that kind of makes that same point. So this is the rate of home appreciation, and you can kind of see how August 2021, that rate has slowed down. It's kind of slowed down in the past several months, actually. So the most appreciation was in April and May, and then now we're kind of slowing down a little bit. However, again, I'm glad that he included January 2018 on this graph, so we can look back and see, okay, so we're basically back where like the normal market kind of has been for the last few years. It's not this huge drop. It's just kind of getting back to kind of a normal balanced market. Here's the CoreLogic data. So the Fortune article linked to this CoreLogic article, which I would also encourage you to go look at. But you can see here, again, it's just the same thing. It's just a graph form. 18% year over year appreciation is what is currently happening. And then the forecast is that it's only going to be 2.7% over the next year. So the other thing to keep in mind when we're looking at the market slowing down and we're trying to predict what might or might not happen in the real estate market is that there are a lot of Americans that are coming out of forbearance. So if you'll remember when the virus started, Congress passed this forbearance law, and they said mortgagors had to, let you go into forbearance and you didn't have to pay your mortgage payment while the country was in lockdown. Well, now those are starting to end. And so a lot of people have been trying to figure out and predict, okay, when those end, what happens? Are we going to see a crash? Are we going to suddenly see a bunch of homes on the market? Like, what's the deal? Zillow has predicted that basically 25% of borrowers exiting forbearance will list their homes for sale. That is what Zillow is predicting based on previous data. It just assumes that over the past year, about 25% of borrowers listed their homes for sale after they came out of forbearance and couldn't catch up. And so we're kind of assuming that going forward. The largest wave of forbearance exits is expected in September and October of this year. So we should see the housing supply start to increase by October of this year, so by next month. It'll be a 15% increase compared to supply in June, Again, that's what Zillow is predicting. And I want to give credit. This is by Dan Handy, Matthew Speakman, and Chris Glenn from just the Zillow.com/research. So we're looking at this forbearance. If 25% of people who are in forbearance end up listing their home, then the market can absorb that. That will actually help the market meet the demand that is coming from buyers. So everything I was reading was saying, if Zillow's correct and we have about 25% of people list, then that's a good thing, and it's going to help us throw some inventory back into the market. There were some people that were saying, well, if it's closer to 50%, then that could actually start to affect the market negatively. It just kind of depends on how many people who are in forbearance decide to list. Now this graph right here is from Fortune and from, again, Lance Lambert. And this is kind of showing you when people's forbearance runs out. And so the most people ran out of forbearance in September. So we had over 400,000 homes that ran out of their forbearance or run out of forbearance this month. So it's gonna be really interesting to see what happens over the next month. And then it kind of steps down through October, November, and then once we reach December, for the next 6 months, it's kind of lower. It's around 100,000 people each month. So, we'll just kind of have to see what happens. Nobody really seems to have a very sure idea of how the borrowers that are in forbearance, like where they stand, like are they actually behind, because a lot of people applied for it but then kept making their mortgage payments. So we may have a whole lot of people who come out of forbearance and no change because they've been making their payments all along. They just applied for it just in case, right? Because it was a scary time and nobody knew what was going to happen. So it's really going to depend on what happens with that. I did not include any slides on this because I wanted to kind of wait and maybe do a separate video about mortgage interest rates, but there was some talk about mortgage rates starting to increase. We have a big announcement coming from the Fed soon, so I'll probably wait until that announcement is made to make a video about mortgage rates, but that is also going to affect the market. But overall, most of the data and the experts are saying that yes, the market is definitely slowing down, but it's slowing down from going, this wild goose chase speed, right? So it's kind of like when you're driving a car and you're going, like, if you speed up to like 100 miles per hour and then you slow back down to 70, it feels like you're crawling at 70, even though 70 is the speed you were going before, and that was really fast before. It's just in comparison to going 100 a few minutes ago, you feel like you've slowed down a whole lot. And so I think that's what's happening, is that, the market has been going 100 miles per hour, and then we're just coming back down to 70, and everybody's like, oh man, we're slowing down, but we're still going the speed limit, right? We're still going pretty fast. I don't know if that analogy makes sense or not, but that's what I think. That's what, the data seems to think. I definitely welcome comments that say otherwise. If you have other sources that you found that are predicting some kind of market crash or some kind of catastrophe, definitely let me know. I definitely want to just report what is accurate, and I want to make sure that we can plan ahead and make good decisions. And so understanding what may or may not happen in the market is really key to that. If you're a seller, I think that it's important to look at these figures and say, okay, the market's going to slow down a little bit. The buyers have spoken and we have reached the ceiling where they will not pay these high prices anymore, right? So just because you have seen in the past few months that the chart's going, like this, doesn't mean it's still doing that. So don't expect that you can throw your house on the market for way over a reasonable price and get a bunch of offers, because that's not going to happen in this market where we're starting to slow down a little bit. If I had a new listing, I would probably recommend pricing it a little bit under what would be like a range of list prices. I would probably price it on the lower end of that range, just because we do see things slowing down and we would want to go ahead and capitalize. We know that the market's still really hot right now. We don't know what's going to happen when all these forbearance hit, so I would probably price your home on the, like, if there's a spectrum of what your home could get, probably the lower end of that spectrum, and then hopefully let buyers offer more if they want to, you know. But that's what I would do if I were a seller. And if I were a buyer or buyer's agent, I would, you know, just say, don't overpay. Don't feel stressed like you have to go in and go way over asking price. That doesn't seem to be what the data is suggesting. I think that buyers are going to be able to relax a little bit. And, you know, I just want to say, just make sure that you are not overpaying and that you are paying a fair price for the home. Because it looks like the appreciation from now to this time next year, most of the factors point to much lower appreciation. So you don't want to overpay and be stuck upside down on your house. So that's my advice. Take it or leave it. It's worth what you paid for it. But if you like this video, if you like this kind of content, then please remember to like, subscribe, follow, do all the things. I am also on TikTok and Instagram and Facebook. And so you can find me there. And I share a lot of this content across all of the social media channels. So whichever one is your favorite, I should be there. I'll see you next time.